Hello, everyone, and welcome to what is the fourth Futureset Systemic Risk Masterclass, Simplifying Insurance Products, delivered to you by Lloyds in partnership with the Chartered Insurance Institute and the Lloyds Market Association. By way of introduction, I'm John Neal, CEO of Lloyds, and I'm delighted to be chairing today's masterclass on what is an incredibly important topic for our industry. We've a packed session ahead with an impressive panel joining me to discuss how products and policy language can be simplified to benefit customers and reduce the risk of an expectation gap between insurers and customers. Our panel includes Matt Brewis, who is the Director of Insurance and Conduct Specialist at the Financial Conduct Authority, Tim Johnson, Partner at Brown Jacobson, James Daly, Managing Director at Fairer Finance, and Julia Graham, Deputy CEO and Technical Director at EMIC. You'll have the chance to ask the panelists questions using the Q&A feature, and we'll also be running some audience polls as we go. And if you're tweeting or posting to LinkedIn today, be sure to tag at Lloyds of London using hashtag Lloyds Futureset. Now, before we get into the discussion, I'd like to open with a few thoughts from me on the importance of how we improve the service we provide to our customers, both by simplifying the way in which we design our products, alongside considering how we remove ambiguity through enhanced clarification of coverage, particularly with the more complex products that Lloyds and indeed the broader commercial insurance market provide to its customers, and which often require more sophisticated risk transfer solutions. As I do this, we'd love to get your perspectives on this topic. So please go to slido.com on your device and use the code SM4 to get to our audience poll, where you can actually enter your answer to the question. The question is, how well does the insurance industry succeed today in providing clarity to its customers? Please don't type your answer into the Q&A feature, as they won't be included in the results summary. We'll have a look at that result in about 5 minutes. So just repeat, go to slido.com on your device, enter the code SM4 to get to the poll and to answer that question. So at the outset, it's really important to remember, whilst there have been distinct complications that have arisen from the pandemic, insurance coverage uncertainty, product complexity is a challenge that the industry is talking about, right the way from multinational corporations through to entrepreneurs and business owners. But as insurance products have evolved over time, and as risks have evolved and become more interconnected and customers' needs more sophisticated, it's therefore no surprise that the products themselves have become more complex in their design and the way in which they're ultimately delivered to the customer. Now, this complexity can clearly lead to a lack of customer engagement with the product they're purchasing, alongside a coverage expectation gap between the insured and the insurer. Of course, this is the result of a number of influencing and interdependent factors, which remain front of mind for the industry as it continues to think about the way of improving its protection and support for its customers, including leading practice and innovation. And all the while, the societal and economic impacts of the pandemic are of a scale that no one has experienced before. It's reinforced the global insurance industry's imperative to accelerate our efforts to build simpler insurance products that are more easily understood by our customers. So we have an opportunity to collectively step back and look at how we can improve and even, dare I say it, rethink the way in which we design the traditional insurance product and the way in which a customer interacts with that product. If we think about the fundamental purpose of insurance, it's to provide comfort and confidence to customers in a world full of changing risks that could threaten their livelihoods. We sell a promise to pay when the worst happens, based on a trusted relationship and a shared understanding between the customer and their insurer. If that promise is shrouded in complexity and ambiguity, with uncertainty about whether cover has been provided for particular risks, then that's something we need to correct. In doing so, Lloyds and the global insurance industry will remain relevant and trusted by customers, creating a braver, even more resilient world in the process. But how? Well, there's no quick fix. And as I mentioned earlier, as an industry, much progress has been made in developing regulation, guidance, codes of conduct to provide greater clarity to customers. And we're all already committed to this objective as an industry. So what's next? So if we look at insurance and the relative lack of societal engagement that exists, it's a starting point. There's an enormous opportunity to look at how we can better educate and engage customers in the products they're buying to enhance their understanding of the cover they have in place and ensure they have the most relevant protection for the risks they face. Alongside education and engagement, the debate around simplification and clarification is a really important one to have. As I mentioned earlier, whilst there are undoubtedly ways in which we can simplify product design, there are potentially more relevant to the small to mid-market clients rather than large corporates whose risk transfer needs are often larger and more complex by design and often equally spread across multiple geographies. For these clients, perhaps the stronger focus should be on clarification as opposed to simplification. To support these goals, innovation will be critical, whether that's looking at digital and modular contracts through to parametric and outcome-based products. As an industry, we have an exciting opportunity to find new ways to make the cover we provide just that bit clearer. A really good example of this is the pioneering earthquake insurance product Lloyd's launched yesterday in New Zealand in partnership with insurance startup Bounce. The product uses cutting-edge technology and real-time earthquake data to automatically pay customers within 5 days following a strong quake. It does this by tracking peak ground velocity, which triggers payments at levels of 20 centimeters per second and above. Bounce is a product targeted at the SME market, but you can sort of see how these principles could be applied more broadly as a simple, unambiguous cover that pays out quickly and based on a straightforward trigger. Last year at Lloyd's, we published a report dedicated to this very subject, and it was entitled Building Simpler Insurance Products to Better Protect Customers. The report sets out a number of ways the global insurance industry could remove complexity and provide enhanced coverage clarity for the customers. And I'd recommend it as a bit of follow-up reading to this masterclass today. And importantly, Lloyd's has partnered with the LMA to take affirmative action across the market. So this includes reviewing how products are developed, designed and distributed, as well as reaching out to trading partners, risk managers, customers, so it can proactively implement changes across a global marketplace to enhance customer outcomes and more effectively meet their needs. As part of that work, shortly, Lloyd's and the LMA will be conducting a review of policy words via a hackathon, and we're also getting ready to launch a product simplification training program in partnership with the CII. So watch this space for both of those. But in order to see significant change across the global industry, a collective effort is needed to enhance the good progress already made and support better outcomes for our customers. And that's why we're all here today. Now, to set the scene and help to shape our panel discussion, let's have a quick look at the answer to that first question. How well does the insurance industry succeed today in providing clarity to its customers? That's quite an interesting response, isn't it? So it does feel as if we might be marking our own homework there. So we've got the scores are coming in as you'd expect, really, reflecting that there is quite a lot more that we can do, although balanced, really. It's sort of 50-50, I would say, in terms of what more we could do. Ironically, I mean, my experience of coming through the pandemic, and that might well come out in discussions here, is I get a sense that there is more that we could do, and we'll hear that as we go through the panel. So interesting to see the response that we think we're sort of middle ground. I would have thought we'd have come out saying that there was much more we could do, but let's get the perspectives of the panel. So it's really my pleasure now to introduce the panel, and we're going to chat over the next 40 minutes or so. We'll do a second poll in a little while, so don't sign out of Slido just yet. And we'll then open up the discussion, so it's your chance to ask questions of the panelists or even me, should you choose to do so. So as I mentioned earlier, I'm delighted to be joined today by 4 brilliant panelists. The first is Matt Brewis, who's the Director of Insurance and Conduct Specialist at the Financial Conduct Authority, who was appointed into role in January 2020 following 4 years as head at the CEO's office of the FCA, so very well understanding of the subject matter we're talking today. Prior to that, Matt worked at the Bank of England for 15 years, most recently in supervision at the PRA. He also worked on the bank's response to the financial crisis and the transition from the FSA to the FCA and the PRA. Our second panelist is James Daly. He's Managing Director at Fairer Finance, a research and ratings agency that looks to help consumers make much more informed decisions and which encourages financial services businesses to compete on more than just price. James Daly's been a consumer campaigner and financial journalist for 20 years. Before launching Fairer Finance in 2014, he worked for the consumer group where he campaigned for a better deal for customers of banks and insurers in the wake of the financial crisis. And before working for Which, James spent 10 years as a business and finance newspaper journalist, latterly as the Independent's personal finance editor and cycling columnist. So our third panelist is Julia Graham, Deputy CEO and Technical Director at AIRMIC, who will need no introduction to many of you. Julia has been a risk and insurance professional for more than 40 years as Director of Risk Management and Insurance for global law firm DLA Piper, and prior to that as Head of Strategic Risk, Insurance and Compliance for Royal Sun Alliance. Julia is a Fellow of the Chartered Insurance Institute and a Fellow of the Business Continuity Institute, past President of FIRMA, the Federation of European Risk Management Associations. She's currently a board member of IFRMA, the International Federation of Risk and Insurance Management Associations. Our fourth panelist is Tim Johnson, partner at Brown Jacobson. Tim specializes in insurance policy drafting, policy coverage advice, and defending professional liability claims. He's drafted insurance policies in relation to all classes of insurance business, including updating policy wordings to take account of the recent legislative changes such as the Insurance Act 2015 and CITRA in 2012. He also regularly advises insurers in relation to complex policy disputes and the defence of professional liability claims against professionals in both the traditional and emerging sectors. And I'm sure Tim will touch on some of the work that Brown Jacobson have done around simplifying policy wording. So welcome to Matt, James, Julia and Tim. There's lots of questions to get through in the next 40 or so minutes, so let's get started. And as a reminder to everyone in the audience, we're also inviting questions from you. So please do use the Q&A feature to submit. If there's a particular panelist you'd like to hear from, don't forget to include their name in your question. So firstly, Julia, can I turn to you and ask you the question, how well do you think the insurance industry succeeds in providing clarity to its customers? What's the role, respectively, of the insurer, and what's the role of the broker in this conversation?
Well, good afternoon, everybody, and thank you, John, for the introduction. I'm just going to dip into a few subjects to set the scene, hopefully not tread too much on the territory and ground of others who are much more experts in certain things than I am. I sort of start this session today almost in two ways. One is life before COVID and life after COVID. And I think we've got to consider today's subject in the context, if only we had known, because hindsight is still a wondrous thing. So if I set that as a sort of general context, I want to cast my mind back. Thank you for reminding me that it's 4 decades, John. Some days it feels like it, other days it feels like yesterday. But I can cast my mind back to the days at RSA, when I ran the personal lines account at the head office for the Royal in Liverpool. And I remember grappling with a homeowner's combined policy, to be told by one of the much more sagely wise underwriters than me that in their opinion this was a policy cover more complex than many commercial allegedly sophisticated covers. And that thought's always stuck with me as I trekked through the 20 or so pages of the homeowner's policy and wondered how on earth the people this was sold to managed to deal with the content, and indeed whether they ever opened the covers of the policy wording, certainly before they had a claim, to find out or try and navigate their way through it. This, in those days, and perhaps also today, was cover nobody really wanted to buy, nobody therefore really wanted to pay for, and nobody really understood. I think we've come a very long way since then, but I still think in many cases that some domestic policies are more complicated than their commercial counterparts. Years later, as I worked in a business with a large presence in New Zealand, John, you've just mentioned the word bounce, and that resonated with me as the foundations on that head office were rubber, and they were built with advisory contributions from insurers, and these rubber foundations were designed to help the building flow with the movements that were expected from part of the world that is well known for earthquakes and ground movements. And that building survived some of the damage that you were referring to, John. So the point I'm going to come back to here was not so much buying the policy, but the wonderful contribution that the insurance industry made to risk management. Now, I'm going to leave talking to the wonderful work, How Clear Are Your Policy Wordings, which is going to be referred to later by Tim. But I want to just here finally to reflect on the Lloyd's report, Building Simpler Insurance Products to Better Protect Customers, which was published back in October 2020. So not too long ago, just about 6 months ago. And we were given a copy of that, John, and Ademic asked to comment on it. And the report set out ways that the global insurance industry could perhaps remove complexity and provide better cover clarity for customers. And the three things that stuck out for us at Ademic were that we need to leverage and build on the application of existing leading practice, including a linguistics review of customer documentation, not just for the complex products, but also for the ones that are allegedly simple. We need to invest in continuous design and delivery innovations, including data-led policies and digital contracts. And we did make the point at the time that if the world has bounced forward between 3 and 7 years during the pandemic in terms of its application of digital opportunities, the insurance industry may have bounced forward by between 3 and 7 weeks. Now, that might be a bit harsh, but I do think, and I'm not referring to Lloyd's here, but I do think the industry generally has struggled to come to grips with some of the challenges that the pandemic has posed in the different ways of working that people need to adopt. And then finally, and picking up very much the theme for today, involving stakeholders and customers directly in product design to build simpler, more relevant products for their needs, both before, but now, of course, most particularly post-pandemic risk profiles. And, you know, when you go back and you look at those 3 points, what we're actually describing are the foundations of resilience. And therefore, what we need to learn from the reviews that we've carried out and that the FCA have also carried out since the pandemic is that we could all do better. It was no day to celebrate when the Supreme Court handed down their judgment. And we've all got a responsibility. I don't think it's just down to the insurance industry. I don't think it's just down to AIRMIC members. And I don't think it's just down to the brokers. And I do wonder, as a final word, sometimes whether the industry is better at advising people how to complain than to take out the right cover for the right risks. Finally, suffice to say that systemic risk was not on the minds of those who founded the insurance industry when life was simpler, slower, and rarely connected. So that's a couple of scene-setting comments that I would like to leave and for others perhaps to pick up as we progress through today's masterclass.
So thanks, Julia. Matt, I might turn to you. I've been thinking of Julia's policy. I had several dreaded phone calls from mates saying, John, can you look at my policy wording for me and tell me if I had cover? One was a farm and land policy, and I tell you it was 143 pages long. I think you stepped very bravely into the gap, actually, right at the beginning of the pandemic and said, look, you know, sadly, the majority of people do not have cover for this type of event. And then at the back end, had to wade in with those court actions that Julia just referred to. So just what are your reflections on the impact of that expectation gap between the insurance industry and the customer?
Thank you, John, and thank you for inviting me here this afternoon. I think for me, the expectation gap goes back to something Julia said there, that actually in reality, for most people, they only really consider their policy at the time when they have to make a claim. And so it's maybe seen as a grudge purchase in some cases, or compulsory purchase, but actually what they're using it for, they're hoping will never occur, so they don't pay a huge amount of attention to it. But what we saw with the pandemic, if I take that as an example, that's been used a couple of times there around business interruption, was people then got out their 20, 100, 200 page policy and looked through, and they looked to see if it was explicit, whether or not they were covered or not for the circumstances they found themselves in. And as we say consistently throughout, our aim was not to be a consumer champion, or it was not to protect the insurance industry. It was to provide that clarity to everybody, to insurers and consumers and brokers alike, to say this is, to get the court to say which way it fell, and to do so swiftly in a way that that meant actually, frankly, that the payments weren't being made into insolvent small businesses that were failing. So what the contract uncertainty is the kind of term that we've kind of taken to use. Business interruption is a case study in that, but it exists in every kind of commercial and retail product that's sold. It is not feasible for every policy to cover every eventuality in the way that it's written. We talk about people not being willing or not having the ability to read a 100-page document. If documents would be 10 times that if it was to include every kind of eventuality. But there's a need for clarity as to what is covered for the majority of cases. And there are alternative understandings under some terms, and so having that kind of clear baseline that we're working to, and having clear documentation that can be understood is massively important. At the FCA, we have something called the Financial Lives Survey that we published just over a month ago, and it had some interesting findings, and it would be, I think, sobering reading for us and for anyone involved in insurance. And it said, as a result of the survey of tens of thousands of consumers, that 1 in 3 adults didn't think they'd get a fair outcome from an insurance claim. And throughout as a result of the pandemic, 1 in 5 said that their trust had fallen. So why does that matter in terms of an expectations gap? Well, insurance is a really important product for many people, many businesses, and they need to have it. It has a wider impact on the economy if it's not there. And one of the things that I think we all should be concerned about is the risk of underinsurance, of people feeling that their expectation, what's the point of me buying an insurance product, because insurers will just find a way to wriggle out of paying. So why should I put the money in? But obviously that overlooks the vast amount of claims that are paid where contracts provide cover, and so. But what does that mean for insurers as well? So, why should you care? You get the premium for the product. If it doesn't meet the claim, then why does it matter? Well, many of your customers, it's an obvious answer. Many of your customers will be repeat customers, and if you have a good experience in dealing with your insurer, you're more likely to stay there, and it leads to a stronger culture, a stronger level of trust and engagement between consumer and insurer. And we think that's very important. We think that then also builds a better culture within firms as a result. So, I mean, these are all kind of the key points that the FCA is interested in when we look at our individual firm supervision, but also how customers interact with their insurers.
I think we do care actually, and those statistics are really quite sobering. As I often say, we're not nasty bankers, we're nice insurers. I think if you come into the industry, you've got a societal well-being at your core. The whole essence of insurance is to be there for someone at their time of need. So hearing those statistics is really not what we want to hear. Just thinking that through, Tim, what are the factors that just drive complexity in insurance products that lead to this expectation gap? How does that apply across different product sets, different distribution models, even different customer segments in your experience? Tim, I think you're still on mute.
Sorry, still on mute is a phrase of our times, isn't it? Thanks, John. Good afternoon, everyone. It's a very interesting point, and there's been a bit of mention already about the work we've done in our study into the readability of insurance policies, which I'll come on to shortly. I think the starting point is you have a topic which is unfamiliar to the customer in most cases. You then add into that the fact that insurance has its own language, it has its own dialogue, it's fairly jargon heavy. There's been a lot of mention of length as well. I think a couple of people have referred to policies being 180, 200 pages long. We have seen many examples of wordings in the region of 35 to 40,000 words, which might not mean much to many people, but by way of comparison, John Steinbeck's of Mice and Men is only 30,000 words. So that's what customers are dealing with a typical commercial combined policy, for example, or a household combined policy with multiple sections. And it's not just the length, it's the navigability as well. Unlike of Mice and Men, where you generally would start at the beginning and read through to the end, that's not how a consumer, and I mean consumer in the widest sense, a policyholder, that's not how they consume the information. What tends to happen is they will be in a distressed state come claim stage. They won't have previously started at the beginning and read the document, and they are trying to find their way to the relevant part. And it's that navigability, in addition to the length, which causes complexity, because you may only need a handful of pages amongst those 200 pages at any given moment in time, but finding it is key. And then there are also much more technical issues at play which lead to complexity. And this really led us to working with linguists at the University of Nottingham School of English for 2 years on a really in-depth academic study into the readability of insurance products, because taking into account all the things I just mentioned, we were keen to understand how complex products were and whether or not there is anything that could be done about it, or is it simply the case that insurance is inherently complex and we just have to effectively live with it. And the findings of the study were actually really fascinating. What we found, or what the linguists found, I should say, was that on average most policies require at least an undergraduate level of education in order for the reader to be able to comfortably read and understand the policy. To put that into context, only 13% of the UK population, so UK adult population, has that level of educational, has attained that level of education. And of the policies we looked at, the most readable required an A level, and many of them required a doctorate level of education, such as their complexity. We additionally found that all of them, without exception, had an extremely high percentage of low-frequency words. Low-frequency words are words which a reader would not expect to come across in their day-to-day reading. And so what that means is, even though a reader might know what a particular word means, if it's not something they're used to reading, what actually happens is, behind the scenes, their brain is having to work harder to recall what that word means, even though it's all in the subconscious. And as you throw in lots of low-frequency words into a document, it's a bit like when you're on a computer and you've opened too many things up at once. It slows down the computing ability, and that's exactly what's going on in the brain when you have lots of low-frequency words. You're asking the brain to do too much. And the complexity was really driven by a lot of things you'd expect. So lots of long sentences, lots of complex structures. So you'd get lots of sentences which were effectively double negatives with right backs and exclusions, and unless and howsoever arising, and all these kind of different structures which are quite difficult for the brain to understand. And then you throw into that complex layouts. So when you're reading an insurance policy, quite often you might need to flick between 3 or 4 different parts of the policy to understand what you need. So you might be looking at the particular section of the wording you're concerned with, and you might then have to flick to the definitions page, which might be 100 pages away. And then you might need to flick to the schedule to see what you're covered, what your limit might be, and then maybe to endorsements, and then maybe some general terms. So to find the answer you need, you're having to flick between 4 or 5 different places, and most people aren't used to that. That's not how we tend to deal with documents. And you also have words not being used in their usual way. So for most people, insured is an adjective, not a noun. And peril and certificate. These are all words which are used regularly in insurance, but not in the way that your average person on the street would necessarily expect those words to be used. And the upshot of all of this is that critically, it impacts comprehension. So as part of the study, readers from the actual target market for products were given copies of policies and asked questions. So real life scenarios, and they're asked questions, are you covered? What's your excess? What conditions do you need to comply with? And the average score in the comprehension test was 52%, and many of the questions were yes, no. So what we could tell was people were really, really struggling to understand the wordings, and that was also borne out by the fact that people were reading the wordings whilst hooked up to eye tracking software. And what the eye tracking software does is it measures to the nearest thousandth of a second how long the reader takes reading each particular word. And what that revealed was that people were finding it really difficult to penetrate these wordings because they would read a section, they would have to go back, read it again. It might take them, a really long time to read one particular word, which shouldn't be complex. One study found that the word keys, other than the door keys, was taking people a long time to read that word. And the reason was it was buried in a really complex sentence and people couldn't understand what the word was doing there. It's got really interesting data from this study. And all of this is all rather negative. But there is a positive end to all of this, which is that what the study did do was give us some very specific information and ways to redraft wordings, which when applied can make very significant differences. So by applying some very specific scientifically sort of proven drafting techniques, we were able to improve the reading age of some wordings by 10 years. So improved some from a doctorate level educational requirement to that of a year 7 student without affecting the cover. And that's the difference between 13% of the population being comfortable with that text and 89% of the population having that level of educational requirement. So there's a huge amount we can do, and a lot of it is just about language, it's about formatting, it's about how you lay the document out. We can remove lots of low-frequency words, which are a big issue, and with the use of science and linguistics, you can literally run a list of the lowest frequency words in a document, and you can look at them one by one and try to replace as many of them as possible. So there are huge things you can do, and ultimately the test is comprehension is proven to improve when that happens. So if we're looking at this, do people understand their cover, which ultimately, in my view, has to be the test, it's proven that can be improved significantly. And also when people read the redrafted document using eye tracking, it's proven they're able to read it much quicker and much easier with much less having to revisit and go back over the text. So in short, there are loads of different things. Each one individually might have just a small impact, but you combine them together, and it creates a really, really significant impact on readability. And so I think therefore there is an awful lot we can do about it.
Tim, thank you. I was saying to Tim before, and I've got to declare an interest here in that my son's a linguist at Nottingham University and sat on the other side of that study. He didn't use of mice and men. He said Beowulf in Old English is an easier read than the hardest policy wording that was presented to us, which I didn't take as a compliment. What was interesting there was that actually it wasn't policy wording rewrites. It was some simple changes to the policy wordings that will reduce the reading age so substantially. Fascinating, really. And I think we should make sure afterwards that report from Brown Jacobson's available. It's actually quite an easy read. So thank you to the lawyers. You've made that a very readable document that is worth everyone having a look at. James, just thinking about it from your perspective, I think Fairer Finance produced a really interesting report on this challenge around the expectation gap recently. Can you tell us a bit about your findings and your commentary?
Yeah, thank you. Thanks for having me. We analyse the reading age of policy documents every 6 months as part of ratings we do for the retail market, for retail consumers. So we have a kind of ongoing longitudinal study looking at readability of policy documents, and Unfortunately, the dial hasn't moved a lot in the 7 years that we've been doing this. But we do look a lot more than reading ages. We have a long list of jargon that we compare documents against. We also look at navigability, as Tim mentioned, which is really important. And then we look at a number of design features like font size and number of words on the page, and whether or not people who are colourblind can read it given the different colour schemes. And I'd say, thinking about the easiest things that firms can do, often it's just actually laying out the document in a way that is intuitive. But when it comes to the language, I think maybe I would disagree a little with Tim. I mean, although we have a consumer ratings business, and we publish information which is for consumers to see, and that's published on the Times website, we also have a consultancy arm where we work with insurers rewriting policy documents, and we've done dozens of these projects now. And our advice in most cases is to tear up the documents and start from scratch. And actually, although that is a big project and quite a painful one, it delivers an awful lot of value beyond just having a single policy document at the end of it. Often firms haven't done that exercise for decades. Policy documents have been incrementally added to. And if you're going to deal with some of those things that Tim talked about in terms of navigability, you kind of have to tear the document up and start again, because many of the structures of traditional policy documents are things that just aren't intuitive to the customer that's pulling out of the filing cabinet and trying to find the answer to their question. So if you have a section called General Conditions, a customer has no idea what will be in there. HSBC had a section called General Conditions, and then a subsection of that called Conditions. I was scratching my head as I was looking at that policy document. And so what we try and do is ensure that every single title in the contents page is a jumping off point that's going to answer a likely line of inquiry for the customer. And then, of course, that means reallocating lots of content around the document. We try and eliminate the definition section altogether and deal with definitions at the point terms are mentioned in the document, so you're not having to do this flicking backwards and forwards. And in the end, we normally do have to define a few points at the top of the document, but those aren't the complex terms. They actually are the simple terms that have a technical meaning in the context of that document. So in a home insurance policy, you have to define the word home because you're going to mention it 100 times, and home doesn't just mean whatever anybody associates with the word home. But through this process and sort of tearing out the jargon and sitting around the table with the underwriters, the legal team, it does become about a cultural change and a mindset shift. People have been writing documents in the way they've been writing them for many decades, and have come to sort of understand that way of doing things, and it feels quite uncomfortable taking out some of those jargon terms and rewriting them. But actually, it's a really powerful exercise. Just making every stakeholder understand the cover that they want to write and the cover that they are presenting. And often there is already a disconnect between the cover they want to offer and the cover that they are offering. It's just that they've assumed the policy document is doing what they want it to do. I think that the more people can sort of get to grips with these projects and prioritise them, the better. But I think be careful not to shortcut it, because there are ways to cut the reading age quite substantially, but still end up with a document that isn't that clear. And then just one final point I want to make is, I suppose it isn't just about the policy document. Of course, if we're talking about the expectation gap, we know that people don't read the policy documents, and they're probably never going to read the policy documents before they take out their policy. And so we need to think carefully about the information we give them in the customer journey. In my world, in the retail world, increasingly it's disintermediated. People are buying through comparison sites. It's a sort of very direct experience for the consumer. And too much focus is put on optimizing the journey so that the customer is out the other end before they know what they bought. And actually, that may be your only moment to slow things down and really set their expectations. And I think in the broker market, things have sped up as well. And I think it's just about taking that purchase process and seeing it as an opportunity to really be your partner in risk for the consumer and help them understand exactly what that policy is going to cover them for, as well as what it doesn't, And where it doesn't, helping them understand other ways to mitigate those risks so that, this becomes a kind of relationship between insurer, broker, consumer, that together, we can understand the risks and you can understand which bits we can mitigate. Because, there were certainly parts of the insurance industry after the pandemic began who sort of turned around and said, well, how could they have ever expected us to be there for pandemics? We would have brought the whole industry over. But actually, pandemic was not an unknown risk. It was a number one risk on the government risk register. So if it wasn't the intention to cover it, it should at least have been at the heart of every conversation for business customers who could have been affected by it.
So Matt, some really interesting thoughts there from Tim and James. I mean, some would argue with the comment I'm about to make is that you're comparing an apple with a lump of concrete, but the retail industry in the UK has had to go through quite a thought process around the policies issues for sort of home and motor. So are there good examples that you would point to of products that are simpler and where clarification of coverage is greater than some of the issues that we've just been discussing?
So I've really enjoyed listening to James and Tim there, and also the kind of the tension between the two approaches as well. But both of those have really they're really useful ways about thinking about the kind of simplification of products, and I'm sure depending on different contracts, different methods will be more appropriate than others. I mean, what I kind of focus on, I think, is quite a bit around value and ensuring customers get value from the products that they're buying. When you go into a shop to buy your weekly grocery shopping, you make an assessment about what it is you are purchasing at that point, and that happens less. And James used the example of how the process through whether it's a comparison website is about speed and generally about price as opposed to the quality of the product. One of the things that we've been kind of focusing on quite a bit is around ensuring value from add-ons. I think this is one of the things that's kind of most complex around products, where what happens is bells and whistles get added on to products, which kind of complicates the language in the policy wording, and people end up buying these additional products that I think they have an idea as to what it is that they're buying, but don't really either remember that they've bought it because it's a tag on at the end of the purchase, or when it comes to claim actually don't do it. And so the really interesting question for insurers for me is, when you're designing the products, when you're designing and manufacturing them and determining who it is you're going to sell these things to, how are you taking that into account? And if there's any use or benefit or value to the customer from buying it, and then also not just then keeping it there forever, actually continuing to review the appropriateness of the product. And we see that, I think, happening more with retail products, as you say, around kind of home and motor, where they are relatively standard in terms of the base offering, but then the bells and whistles that are added on are the things that make them more complex.
Interesting. Matt, thank you. What I might do is just pause there and just start another poll with you. So same as the first round you did. So please go to slido.com on your device and again use the code SM4. So it's slido.com #SM4 and get to the audience poll. And we've got two questions in there. So the first question is, what are the two most impactful things that the insurance industry can do to simplify products and promote a greater understanding of coverage? And the second is, what are the two key skills and capabilities that we need to improve as an industry to protect society against systemic risks? So just two questions. So I'll carry on with a discussion with the panel, but the two questions: what are the two most impactful things that the insurance industry can do to simplify products and promote a greater understanding of coverage? And the second question is, what are the two key skills and capabilities that we need to improve as an industry to protect society against systemic risks? And we'll come back to those in a little while. Julia, just if I could turn back to you, how can we better involve customers in designing new, more customer-centric insurance products and solutions?
Okay, thanks very, very much, John. I think just for a second I want to step back and just think a little bit about the context of all of these masterclasses, which is systemic risk, because I think that's been through a number of profile changes. And I think the thing to reflect on is that this is a risk that spreads from unhealthy environments to relatively healthier ones through something that allows them to transmit. And again, looking at the context of whether this is something that we grapple with in the insurance industry, is that the ripple effect resulting from these risks can affect whole economies, as we've recently seen. So picking up some of the challenges, in my experience, when you talk to people about these risks, the general view is it's never going to happen to us. You know, large companies and small companies, individuals alike. I think it was one of our previous speakers talked about these risks are not new. The World Economic Forum Global Risk Report publishes every year and has done for over a decade. And certainly for the last 10 years, a pandemic has been on that list of risks in terms of high impact. But the key issue here is low probability. So yes, it is on that best kept secret called the National Risk Register. I don't think very many people out there know that we have something called the National Risk Register. But the challenge is that if it is low probability, it's very difficult to stand in an organisation and say, you need to pay attention to this, when actually it looks highly improbable that it's going to happen. And people have got more immediate things that they want to focus on, what they believe really matters. And by the way, don't ask us to pay to insure something we think is remote and unlikely. So there is an immediate challenge that people don't take these risks seriously. And I don't think it's what the insurance industry was designed to manage. It just didn't really exist in the form it is today when the roots of the insurance industry were first sown. And I think the final thing is it's very hard for boards to address these issues as well, because we all prefer to deal with easier, more immediate risks to manage. And one of my friends and authors, Michelle Walker, who wrote a book called Grey Rhinos, you know, we know those risks are there. We can see the rhino, and it will charge us if we ignore it. But we still do until it's too late. So I think anything that we develop has to recognise that everything we do today is global, digital, and is required to be sustainable. Oh, and by the way, these things are all happening together. So what? What about that context? Well, society is generally more open and transparent. And it's a special task of governance that systemic risks need early warning indicators. And this is something I think that the insurance industry is very good at doing. Because in complex systems, early warning signals are very difficult to determine, because often the signals, when you see them happening, can be easily overlooked. Now, with the pandemic, those signals were overlooked. We know that. And we probably didn't pay sufficient attention to them unless you happen to live in a part of the world that was used to dealing with disease, like South Korea and other parts of Asia, who paid attention much more quickly and effectively than we did. So these days, organisations are going to look to their company leaders for guidance and advice, not politicians. So I do think, and that sort of is a feature of the Edelman Trust Barometer, which again I would urge people to go and have a look at if you don't already. So societal attitudes are a real problem for systemic risk, and particularly for pandemics. And I think there is an expectation gap they're not going to happen. I think our memories are very short. But I think what the insurance industry can do, and I'll come back to this, I'm sure, again, is that what the insurance industry can help us to do is to better risk manage them, not just necessarily insure them. Because I really think fundamentally this is not what the industry is geared up to do. But there are some great risk management interventions that the industry can help us with on these risks.
Thanks, Julia. James, just changing tack a little bit and just thinking about the sort of digital world that we all live in today. What are the risks and opportunities as you see them in the growth of digital distribution? What impact is that having on customers' perception of the cover that they're able to get and the understandability of that cover?
Yeah, well, I mean, as I was touching on a bit earlier, one of the risks is the speed and ease with which you can get insurance now. And so if we're starting from that point, that was mentioned at the start of this discussion, that Julia said, where the consumer is not particularly engaged, it's a bit of a grudge purchase. They want to get through as quickly as possible. And that combined with the price competitive environment that comparison sites have provided means that at the same time insurers are competing to get themselves to the top of the tables price-wise, and to do that they have to hollow out their cover. So the quality of standards of products is reducing, and the speed with which consumers are going through the journey is increasing. And the combination of those two factors means that more consumers are ending up with products that don't meet their needs. So that's the downside. However, I think we're going to see a total change in aggregation. And I know I'm talking mostly about retail customers here, but I mean, I think almost everything I'm talking about applies to small and micro enterprises. That there's a growing number of, options for those kind of businesses to buy their insurances online now. And I think we're going to see aggregation change to the point, using open finance technology where platforms understand your needs, monitor how much you're paying, and at the end of the year are serving you up a few different choices that fit your needs. And we're going to move away from this sort of enormous list of options on price comparison sites. And I hope that as we move to that world, more thought will go into the quality piece, because that has been forgotten. And obviously, what my business does and was set up to do is sort of create ratings that help people look beyond price. And we still don't see anything very reliable out there that's helping people build that picture. And a lot of the ratings that are out there are all 5 stars because everybody wants a 5-star rating. But we need to be able to give consumers more honest information so they can understand what really meets their needs and what doesn't. So the good news is that even as the FCA is considering banning price walking in the retail insurance market and in the home and car insurance market, which personally I'm not a fan of, but the good thing that's already triggered is the aggregators are saying, actually, this is the moment where we need to start thinking about quality properly. And I hope that continues across the industry now, because price is only one factor.
Tim, at the sort of some of the complex end of contract drafting and wordings you see, we're now seeing parametric covers come out there. We're seeing outcome-based products being designed. How do you think these different types of product structures could be used to improve the understanding of cover, or even simplifying the products? And I guess at the other end, what are the challenges with these new products?
Yes, there's also some quite exciting sort of developments out there at the moment. You've mentioned parametrics and outcome-based products. I think where they can really help is in speedy payment of claims, claims verification. We've already mentioned bounce, and I think the post-claims experience can be improved. But ultimately, they are still off the back of a product which is a legal contract between the insurer and the policyholder, and the cover still has to be communicated clearly in a way the policyholder can understand. And that goes back to not just the document itself, but also all the pre-sales literature and all the documentation surrounding it. So, in a sense, there are all sorts of exciting things can come from this in terms of improving claims experience and even how the product is distributed. But I don't think it necessarily changes much of what we've spoken about today, which is the question of, does the customer understand what they are buying? And when they need to use that product, is it easy for them to identify whether they're covered, how they're getting paid, what's covered. And there's a lot of talk about all these new technologies which can undoubtedly help, but actually there's quite a lot of existing technologies which can make such an improvement to understandability and a policyholder's experience. And they're really simple. So things like if you have a document, a policy wording, or any associated documentation that's given out digitally, if you have hover over definitions, the technology's been there for years. It makes such a big difference because someone isn't having to move their way around the wording. It's there. Everything they need to know is there. Equally, we've worked with insurers on things like personalisation. So instead of having to refer back to a schedule to find their limit, the document pulls the limit into the wording itself. So when they, when it'll say, in the event of a loss, we will pay up to, they don't have to go back to the schedule to find out. It will actually just put £5 million in there. And things like navigation as well. You can have smart navigation on documents. So, you can search for the word you need, and if you need to look at the exclusions, you can click on the word; it will take you to it. And we've worked with insurers on working on these kind of smart documents, particularly when they're delivered through apps. And none of this is new technology. So, whilst I think it's really important to look at these new product developments, actually, I don't think we're quite there yet in terms of having really a developed market for parametrics and the like. But actually, there is so much that can be done with existing technology and existing products that would make customers' lives so much easier. And that's before you even look at changing any words or anything of that nature.
Interesting, Tim. So Matt, you've got such an interesting helicopter view from where you sit with the conduct regulator as to what's actually happening right across the piece. So from your experience, what you see, what skills and capabilities do we need to invest in within the industry to provide that better clarity to customer, or is it not skills and capabilities? Is it simpler than that?
So there's absolutely a place for improvement, skills and capabilities, and continued improvement and continued conversations like the one we're having this afternoon, because all of this kind of adds to the thought that goes into in different organisations into how they do with this. From our perspective, it's what is it in companies that is driving the behaviour, and actually quite a lot of that comes to skills and knowledge. If it's about sales and just getting in more premium, actually a company is less likely to value the skills potentially. The focus will be on just volume as opposed to quality. We've talked quite a lot here about risk management and from the example of bounce, the bounce and the rubber foundations of a building in New Zealand. A good examples of improvement in both risk management and innovation that lead to better outcomes, less payouts potentially, because the risks are mitigated earlier, and in the case of bounce, more speedy remediation of kind of customers' issues with that kind of 5-day kind of turnaround payout, which is a really good kind of innovation there. So thinking about those issues is really important. And in terms of systemic risks, I mean, obviously one of the things that we want to see products available for people and companies to buy when they need to buy them to protect themselves from the risks that they see and the risks that could impact them. The important thing is that they understand the risks, and the insurer or their broker is able to assist them in buying the product that meets their needs. And actually, that's a really important skill on the behalf of the insurer to understand the customer need and be able to then sell them the appropriate product. And we see really strong examples of that in some firms in the advisory side of some businesses. And obviously we also see the flip side as well. But it's an area where we're keen for a greater, always keen to see improvement in firms.
Perfect. What I might do is to ensure that we get some time to take questions from the audience. So let's just have a quick look at the results of the audience poll on slido.com, those two questions that we asked earlier on. Maybe if we can get that up on the screen, it'd be interesting to see how the audience have answered those questions, if we can call that up. Interesting, isn't it? Big commentary around simplification. 73% of people saying that that's the key aspect there, and interesting to see, a summary provided with the document as well. Something that actually, to that discussion we were having with Matt earlier on, the retail industry in the UK for sure had to go to. You have a summary as well as the document itself, and credit where credit's due, the summary does actually reflect the detail of the document that's there. Can we have a look at the next question as well, if that's okay? So what are the skills that we're looking for? Yeah, so quite a spread there coming through with the answers. Interesting to see the comments around innovation, data, technical competence, and collaboration, risk partnering, product and design. I think some of those are outputs of the inputs. I think if we're innovative and capable in what we're doing, then we ought to be able to issue products that are new, that deal with the new risks that people are encountering. Yeah, good answers coming through there. What I might do now is, as we've got sort of the next 15 minutes or so, there's been some great questions that have been coming up in the Q&A box, so I might just take a few of those. Interesting one coming through, which I might pick on James on, because he was answering that one indirectly in the Q&A box, which was quite a good question, saying, does it really matter if the policy is written in plain English at the level of an average age of a 7-year-old if no one's actually reading the policy wording in the first place? What's your thoughts on that, James?
Yeah, I mean, as I was saying in the chat, I mean, of course, the first thing to say is it's a bit chicken and egg, and that no one's going to read it if it is written with a reading age of 25, because, it's just going to be impenetrable and not inviting. So if we're going to attempt to get reading ages down to a level that's accessible for the majority of the adult population, then no one's ever going to read it. But actually, to slightly contradict myself, I don't think the aim is to get people reading the policy documents from start to finish. It is to ensure that when they turn to their policy document with an inquiry, they can find it, they can understand the answer to it, and there are good reasons to do that run beyond, it just being the right thing to do. It obviously reduces the volume of inquiries coming into your call centres. It means it's easier to explain to the customer where the boundaries were between being covered and not covered, because that's all clearly laid out in a language they can understand. And then, if you are dealing with SME customers or retail customers and you're going to the Ombudsman, they're going to judge you on what is fair and reasonable. And increasingly, it is not deemed to be fair and reasonable to include a clause that a customer couldn't have really got their head around, even if an insurance professional does understand the context of it. And then, perhaps another one, a similar point, is that if something does end up in the courts in the retail market, the Consumer Rights Act does now talk about consumer-facing contracts being written plain and intelligible language, about onerous terms being made prominent. And we haven't seen a lot of case law around that yet, but I hope we do over the next few years, because I think that could be a real catalyst to spark people to be braver in simplifying the language. I think there's a feeling that you're taking on a big risk if you start moving away from those words that the industry has relied on for years. But actually, the more people do it, the more firms can take confidence that actually it's the way that they have to go, and actually it leaves them in a safer place, not a weaker place.
Yeah, Tim, it's interesting. I had to remind myself when I came back into the Lloyd's market that many things are inverted. It's often the broker that produces the policy wording in the Lloyd's market. Outside of Lloyd's, it's the insurer that produces the wording. I mean, what that's resulted in, and some people say it's their IP and it's their value proposition, is a plethora of wordings, often different wordings for different customers serving the same purpose. Is that a good thing or a bad thing? I mean, should we look to standardise wordings? Is that part of the solution, or is it just really getting under the skin of thinking a bit more carefully at the point of drafting and getting the wording properly documented and understood?
I think it's the latter. I think there may be occasions where standardising wording is helpful, but given the really broad range of risks out there that are being catered for and the different range of customers, I think it's something I know that people have looked at, but inevitably people end up with wordings that diverge because different customers have different needs, and it is very hard to standardise. It just sort of pick up on something Jane said and you sort of alluded to. I've been asked in the past, whether or not this is something that we should only really be looking at for the retail market and for SMEs, and should we leave sort of bigger businesses as they are. I mean, my view is if you can find a way of making your documents clearer and easier to understand, why wouldn't you do that? Why would you only do that for certain sectors of the market? I could see why that might be the priority, but ultimately, if something can be clearer and easier to understand, that's got to be a good thing. And all of the research on readability shows that actually, there are some boardrooms of FTSE 100 companies filled with people who have relatively low levels of literacy. It's a fact. It's not necessarily the case that buyers of insurance products for larger entities will have a better ability to understand documents. It's simply a fallacy. And so my view is actually the simplification approach should be applied across the board, and it's not about dumbing down, and it's not as James has already alluded to, it's not about moving away from understood language necessarily or weakening the protection. If done the right way, it should still be first and foremost a tight legal contract. What this is about making it clearer and easier to enforce, and actually fundamentally fairer, so that all parties know what it says and understand what's covered and what's not covered. And actually, it comes down to that basic point. So I don't necessarily see a need to take a different view for different segments of the market.
Okay. I mean, Julia, just thinking about some of those statistics that Matt gave us earlier on about sort of the trust in the industry. I mean, if we're to get the customer believing that the product and the policy will do what they expect and pick up for them in their time of need when the claim's being made, are we doing enough to regain customer confidence in us and trust in us as an industry? Is there more that we need to do in your view?
I think there's always more to do, but I'd just like to add a couple of points on the dialogue that was going on, John. And that is, the language isn't just insurance, the language is also risk. And I think too often when we have these discussions about coverage, we focus on the technical policy language. And one of the ambitions we have in ERMIC is to make risk and insurance much closer to each other. And I do wonder sometimes in some quarters in insurers and brokers whether they've actually got the knowledge of the risk language, because I think that comes first, and it's the risk language that should drive the insurance. I think the second thing that is a bit frustrating is that we may avoid complex and ambiguous language, but I think one of the frustrations is that quite often we're not consistent, and so the same insurer for the same cover can have different wordings, and that's incredibly confusing. And I sometimes struggle to work out why that is, other than it's a legacy that hasn't been sorted out. Two other things is we should share the taxonomy. I don't think it's a threat to competitive advantage to use the same language, but I do think sharing taxonomy, sharing data sets, and looking at the data that we gather in the first place gets confused with what you then do with it, which is where the competitive advantage sits. And my last sort of, I've sort of got the soapbox and I'm happily taking possession of it, where is the claims function in all of this? I spoke to one of the London claims groups last year, and I asked them how often they had a dialogue, and they were invited into a dialogue by their development and underwriting colleagues the time to involve claims is in the stage of policy design, not in the notification and payment of a claim. And I think the claims specialists have got so much to offer in designing what we need, but I don't think they get invited to the table often enough, or if they do, it's too late. So consistency, shared taxonomy, bring the claims experts to the table, but the first thing for me is the merger of risk and insurance.
Interesting. Matt, I might sort of call you in on the subject of advice with insurance products and services, because that's a complex subject that you have to grapple with. People talk about non-intermediated SME insurance. Actually, often SME insurance is as complex as any other. You can see 14, 15, 16 products in one policy cover. And at the other end of the extreme, you've got the sort of the weird and interesting world of comparison sites that James was talking about earlier on. How do you deal with the subject of advice from the regulator's point of view, and how that should be applied, and whether it should or shouldn't be applied?
It is a very complex question. And the role of intermediaries, brokers, is really important in that, in ensuring that the customers have the right information given to them when they need to make their decisions. And it's an area that I think we at the FCA need to do more on. And I'm very keen to hear views on it, because for all of the reasons that we've talked about here around the complexity and ensuring people are buying the right products for their needs, their in the IDD language, their demands and needs, making it clear what they are, and then getting a product that meets those needs. That in many cases there is a need for assistance and advice. And so it needs to be able to be provided in a useful, clear way that means the customer can understand the distribution chain, it can understand how the product's been put together, and that it meets the needs that they believe their business or them as individuals have.
James, in your experience, how do insurers surprise customers on the upside? I mean, it can't all be negative. I think, as we were saying earlier on, the retail market's learned painfully from its experiences over the years, and for the vast majority of customers now, the claim settlement processes are really quite speedy. Often the settlement might even be more than they expected. Do you see good examples of that?
The thing is that there are loads of great examples in the industry, but I can't help but berate insurers and the trade bodies when they press release how many claims they've paid, because I'm obsessed with the 10% of situations where things go wrong, because that has a disproportionate impact on the reputation of the sector. And I think the industry quite understandably wants to focus on the 90% of cases where things went right, but I think they underestimate the damage of those cases where the consumer felt let down. So we need to get to a point where 99% of customers are being surprised on the upside. That means, firstly, ditching advertising campaigns that talk about paying 99% of claims, completely unhelpful. And giving consumers the impression that insurance is a panacea and it's going to be there whatever happens. Particularly in the retail market, that is the message that gets reinforced in advertising. And then we have to slow the purchase journeys down, and that's on the broker and the direct side too. Take that moment when you have their attention to engage with the customer and help them understand the things your policy doesn't do. And it feels very unnatural, especially if that part is being driven by the marketing team, whose job is to try and get you over the line and make you feel good about what you're buying. But we need to introduce a little bit of friction into those journeys. And actually, I think it probably will have to come from the regulator, because I'm not sure the industry can do it on its own. But if we can get to that point where people understand what they're covered for and what they're not, then it does present, for me, it's my motto for life, not just for insurance. Understand where your expectations should be, keep them on the low side, and then you give yourself the potential to be surprised. And I think that's where we've got to get to with insurance.
Tim, taking the lessons from a lawyer, you've seen enough situations where it's gone wrong, particularly on some of the more complex insurance contracts. I mean, outside of the wordings issue, what are 2 or 3 learnings that you would have had that would have solved? And I'm going to do you out of a job here. What are the 2 or 3 issues that you've seen that would have solved the problem that you've ended up picking the pieces on?
I think so much of it is around, we've spoken a lot about wordings, but so much of it is around the non-wordings and all of the other pre-contractual documentation, because, as I think we've all established and agreed, very rarely does someone read the entire wording or any of it before the loss event, and certainly before purchase. They read it afterwards. But what they will have read is a combination of policy summaries, marketing literature, IPIDs, all of the extra contractual documentation. And it's really important that documentation is clear and an accurate reflection of the wording. And actually so many issues and so many of the problems that go to FOS aren't actually necessarily around the wording itself, but around a potential disconnect between the coverage as set out in the wording and the promise and all of the other documentation in relation to it. And so when we're working on wordings, I usually try to insist to my clients that if we're working on the wording, we also need to see all of the other documents, because unless it all speaks to each other and all adds up, then it doesn't really matter what the wording says. If it's been missold and the other documents aren't accurate, then it's irrelevant what the wording says to a certain extent. And actually, that's probably the biggest issue outside the wording itself. Is it's all of the other stuff. And I include in that call scripts. What are people being told over the phone? When they phone up, what information is the insurer providing to the broker, which then goes to the policyholder? It's all of that information together has to be completely aligned.
Yeah, I mean, Julia, we're getting the same advice there from James and Tim, aren't we? At the point of the purchase of the insurance product, that's the best time to sit down and explain exactly what the situation and circumstances are that are being described in the policy. And do we do enough of that? Because arguably we should know in advance what the most complex aspects of the cover are.
Yeah, I think the Insurance Act was helpful in that sense of making it abundantly clear that you should understand the risk that you're presenting and to put that onus on all parties. But a couple of things I would add. We haven't really talked about getting independent health checks of your wording. They are complex, often complex legal documents, especially for larger risks. And I would advocate getting legal health checks done by specialist advisors who understand the legals of the wording that you've bought, so that you've got an independent pair of eyes taking a look. I can't think of many contracts in life where you wouldn't do something similar, so why should insurance be any different? And I think the other thing is, you're right, John, it's at the point of purchase, but think about purchase much earlier. We're recommending to members that, if you've got a December renewal, you're probably going to be starting that renewal around about April. And therefore, renewal is almost a continuous process, so that you understand your risks, you present them to the best of your ability, and that you have time to run those checks, and that when you get to the final stage of your renewal, you've really got a thorough understanding. And of course, that isn't all about the risk that you're transferring. I know there's no such thing as true transfer or financially transferring, but also it might allow you to take a bit more risk, actually, because if you go through that process really well, you're probably going to come out of it with a superior understanding of what your risks actually are. And you might ultimately actually save and take on more of your risk. And there's nothing, in my experience, insurers like more than a risk that is confident in itself. So I think there are some basic lessons that we could all follow that would make for a more successful outcome. But that independent health check early in the process, I think, is the one I'd like to underline here.
Interesting. Just picking up on the lessons point there, Matt, I think interesting advice from Julia, getting ahead of the curve with a health check. When we all think of technology these days, I don't think technology projects quite go off the rails the way they used to, and part of the value of that is the lessons learned cycle teaching ourselves that we go through. Do you think there's a space for that, including involving discussions with the regulators as to, when things have gone wrong, what's gone wrong, and what could we do to ensure that we don't repeat the problems of the past?
Yes. Sorry. Yes. So, I guess to expand on that a bit. Julia made a point a few minutes ago about the importance of ensuring, product design, that you involve the claims guys in that work as well, and that's crucial. Because they're the team that see how people are using the policies and then have that view, and so every part of the distribution chain where things have either gone wrong or where there's a new product building on a similar previous product, that's a really useful exercise to go through. And I would always be happy to go through that exercise and have those conversations. I think there's a lot about what the underwriter meant when they wrote some language versus how that's then later interpreted, and how that's understood at various points in the distribution chain, that we've talked about quite a bit there. That's important to look at when things haven't gone as well as they could have done. And I know many companies will be doing that for various parts of whether it's business interruption, whether it's travel policies, or anything else that's impacted by COVID, because there's a need to review the level of cover and what has worked and what hasn't. And so these kind of conversations like we're having today about ensuring the language is clear and involving people with the skill set who can understand, or use those technologies in order to look at the wording, involving customers and who have been through experiences with the firm and what they have learned, the brokers, etc. All everybody, and including the regulator, can help or should be willing to help to make better products for the future. And at the FCA we certainly are.
Thank you. That was an incredibly interesting session. As we wrap up our fourth Futureset Systemic Risk Masterclass, I'd like to express thanks certainly on our behalf, but also on everyone's behalf that's dialed in today, to Matt, James, Julia and Tim for joining us to share their insights on product simplification, and actually a much broader discussion than just that. And thank everyone that's dialed in today for joining us. As I mentioned at the outset, we as an industry have an important role to play in helping customers better understand and manage their risk by looking at ways in which we can educate and engage them with the products they're buying, as well as finding ways to simplify and provide greater clarification. So whether that's removing ambiguity for both the insurer or the insured or more, I think there's a lot for us to think about. I think we've collected some really good advice today. I think the good news is that both the industry, the insurers and the brokers are on the page of taking the lessons away from what we've seen in 2020. So great advice from Julia to pick up on a health check, way in advance of the renewal process, to really think at an early stage as to how the customer's feeling, what their needs are, what their needs might be. I liked the discussion from both Tim and James around this sort of holistic customer experience, not just about the policy wording. It's about really understanding the connectivity of the customer's needs and how that translates into an insurance product, and therefore the wording. And then we just covered off at the end, really, of saying there's no shame in lessons learned. Not everything works well at first attempt, so there's no shame in going back and seeing, A, what's worked really well and building on that, and B, what's not worked so well, and we need to think about that as well. And good to see some of the responses come through on Slido around the focus on things like product simplification, things like product summaries, things like innovation that need to apply. So some really good feedback and a very, very good discussion. So I think as we take a step back and, hopefully society is now at the beginning of the the end of the dreadful impact of the COVID pandemic, there's never been a more important moment for the industry to really think about developing sustainable solutions to help society protect against the impact of systemic risk in its broadest sense, and actually strengthen our relevance as an industry to that customer base, and to reinstill the trust that we believe the customers should have in us for the product and the service that they buy, and of course us fulfilling that obligation to pay the claim at just the point in time where they feel that they value that most. And I hope and know that everyone that's dialed in today will very much be part of that effort. So just following this session, you will receive an email with some further information and resources that will help support what we've discussed today, and hopefully what you've learned today. So once again, can I just thank everyone for joining us for our 4th Futureset Systemic Risk Masterclass, and we hope to see you again soon. Thank you very much.